Hey everyone, welcome to episode 32 in my monthly series where I'll give you a quick commentary of the overall stock market in the past month and where I will review some of the best high yield income oriented funds and see how they're doing, which ones of course are the best ones to buy in my opinion, which ones have the most value. If you're new to the channel, welcome aboard everyone. This channel and my investing strategy focuses on a long-term buy and hold income oriented strategy. So the primary objective of this strategy is to generate relatively safe, consistent passive income forever. And one important factor of my strategy is to invest consistently over time. If you do this, you always will capture what's undervalued in the stock market and dollar cost average, of course. So I do not invest, just a reminder, I do not invest in single stocks or single companies anymore. So all the picks or all the funds are going to be reviewing today are funds, either they're ETFs or closed-end funds that are really designed to provide consistent and high passive income. So they are not growth oriented, they are income oriented. So most of them have income oriented strategies or income enhancing strategies like covered calls or leverage, and sometimes a combination of the two. So remember that I am not against the more mainstream growth strategy or dividend strategy. These strategies work very, very well long term as well, but they're more for investors who are prioritizing maximum total return and growth, whereas my strategy is designed to generate maximum income or maximum cash flow. So let's check out just the market, how they performed, the Canadian and the US in the last month really quick, and then we'll check out the high yield funds on both the Canadian and US markets. All right, everyone. In terms of the overall stock market, if we look at the Canadian stock market, of course, we're going to look at the S&P TSX Composite Index. In the last month, it's up about 3.86%. So it's been pretty good in the last 30 days. I'm filming this on December 5th, of course, near lunchtime. So the market is still open. It's still going. But past month, up 3.86%. The American stock market, if we look at the S&P 500, past month, up 5.5%. The NASDAQ 100, up 7.9%. So overall, it was a pretty good month. And if you're asking yourself why, with all the recession fears coming in 2023 is going to be a disaster, you see all these doomsday thumbnails and videos on YouTube, just remember one thing I have to keep reminding myself as well is that the stock market is, the prices of the stocks right now is really an indicator of the future. The market, or the stock market, is always 6 to 9 months ahead, right? So maybe the recession, whatever it's going to be, if there's going to be one or not, there probably will be, it has already been factored in, and maybe stocks are already past that. It's very, very possible. Also, the positive news more in the last 30 days is that maybe the Fed, maybe the Bank of Canada will start reducing the interest rate hikes. They'll start calming down on those. They can't just keep raising and raising them at those big chunks forever. Remember that it does take time for the interest rates to factor in and to bring inflation down. So remember, stock market is ahead. So are the bad times completely over? I'm not sure. Don't really care. This is why I invest the way I do. I am a buy and hold long-term investor. So overall in the last month, pretty good. What will it do in the next month and the new year? We'll just have to see what happens. So now it's time to take a look at my top or my favorite income-oriented funds. We'll see how they're doing. Let's start with the Canadian ones and then we'll go with the American ones after. All right, everyone. So as usual, we will start with the Canadian high yield fund. So of course, we're going to start with the 4 all-in-one high yield funds, the ones that I really, really like the best. So HYLD, HDIV, and now we have BMAX, a fourth player to the game. So HYLD, no surprises. Everyone still, declaring their dividend at 14 cents a month. The fund is growing exponentially. It's already past 300 million in assets. Really love the fact that they recently added JEPI here. Hopefully they add JEPI's twin brother, JEPQ. Eventually, we'll see what happens. So no surprises here. Are the days of 14% yield over? Maybe, but what's second best to 14% yield? Almost 14% yield. So of course, as HYLD, the price recovers, as the overall US market recovers, the yield is going to go lower and lower. HDIV doing very well, still beating the TSX 60. Right, which is the one of the best indicators for the overall Canadian market. So you see here in red, 115K for HDIV in the last year. Your 100K would become 115, and if you were just invested in the S&P TSX 60, so something like XIU, you would have your 100 would be 109. So it's still beating the overall Canadian stock market, which is absolutely incredible. In terms of distributions, still stable at 12.5 cents. So this one is also going strong and still growing as well, 277 as well. HDIV, no complaints here, no changes here, very, very stable, a little past 10% yield here. So, and yeah, by the way, HDIV is a little over 9%. Typically, it's a little bit lower than HYLD because the Canadian stock market is doing a bit better than the overall American stock market. So HDIV growing as well steadily, 232 million. Nothing to report here. Of course, BMAX. We have BMAX now, a new player in the game, which has, I think, the lowest yield right now, or very close to HDIV at 9.13%. So it started at $12, I believe. Now it's at 13, so it's already growing. This is probably going to be your most conservative all-in-one here. HDIV and BMAX would probably be your more conservative one, just because they have 30% in fixed income here. Make sure you check out my BMAX video, my recent BMAX review video, and the interview that I do, of course, with Chris Cullen from Brompton, where we discuss this fund in detail. Of course, we have EIT, everyone's favorite. This to me is probably going to be the big winner of 2002. So always trading at a small discount here. You see that it's worth $14.41, but you could buy it at $13.84. So always at a nice discount here. And you can see the 1 year performance, 9.3% up in the last year when the stock markets have not been doing well. Try to find something that's up 9.3% in the last year. I dare you. If you find something, let me know. But all good stuff here. Can I say which one is the best one out of the 5 to buy? Not really. Depends what you really want, what you really need. But of course, if we're talking yield wise, it is still HYLD. By far. Now let's look at the split funds. So in terms of the Brompton ones, which we go here, the homepage, we could see all of them. There's none really that kind of stick out to me that have good value in terms of, the NAV compared to the stock price. You have SBC, LBS, which are trading at pretty significant premiums, not super significant, about the 15 to 20% range. GDV, big premium, of course. It's trading at $10 something, and it's worth $8.86. So GDV's at a big premium. DGS is probably the most attractive one because it's worth $5.81, but it's trading. You could buy for about $6.34. So the premium is it's less than 10%. So DGS is actually pretty attractive if you want to pick it up. Keep in mind, this is of course a higher risk one when it comes to missing dividends, but check out this when you do get your dividend, you're getting almost 19% yield, which is incredible. PWI has been on a tear recently. I think it's still a pretty good buy if you want some really defensive stuff, real assets, boring companies in here. So it's worth about $7.34. You could pick it up for $8.45. So it's not so bad. Let's calculate that together. I'm curious here. So you take the big number, you divide it by the small number, -1 times 100 will give you the premium. It's trading at a 15% premium. So yeah, my opinion, anything less than a 10% premium is a good buy. Between 10 and 15 is okay. 15 and 20 is think about it if you really want it. Anything over 20% premium, I would say, is I would probably wait. The big story in terms of closed-end funds, in terms of splits, is really the middle field ones that I feel are the best value this month or right now. So RS, real estate has taken a hit in the last couple of months. Great time to buy real estate, guys. So this is definitely one of the ones that I would look at and strongly consider in December, especially if you need real estate. So RS, the NAV is 13.31, and you could pick some up for 14.08 here. Let's just refresh it and see. Still 14.08 today. So yeah, the premium is very small. It's something like 5 or 6% or something like that, right? So if you take 14.08 divided by 13.31 -1 times 100, less than 6% premium, guys. Really good. So RS, a good pickup this month for sure. And even ENS, which is even better. I mean, it's worth 15.15. That's the NAV, and you could pick some up at 15.39. So almost on par here. And Enbridge, as we know, just recently raised their dividend again, which makes ENS even safer, even more solid. So yeah, in terms of closed-end funds, everyone, of course, EIT always good, right? Because it's trading at if you want some more EIT, it's trading at a discount. But because the stock price went up so high, now I don't even think you're getting 9% yield on it, right? It's 1384. So 1.20 divided by 1384 times 100, you're getting less than 9% yield now, 8.67. But EIT is still a great investment. But my opinion, the big winners, we're going to take a look at the QuadraVest ones now, is RS and ENS for sure, if you're looking for real estate or if you like Enbridge and want some. DFN, the numbers or QuadraVest actually were just updated recently, which is good. These are the November 30th numbers. So 1619, we minus 10 from that to get the Class A, approximate Class A NAV. So 619, but you got to pay 772. That's too much of a big premium in my opinion. FTN is definitely the winner on the QuadraVest side in my opinion. 883 is the NAV price, and you could pick some up for 933. So it's about 5 or 6% premium. Really, really good pickup. This is actually what I purchased for my December purchase. I picked up 5K of FTN. You guys will see that next month in the stock picks, in my portfolio unveiled. And don't forget that I am on Blossom. You could follow my portfolio live on Blossom. There is a link in the description below to install it. It's a mobile app, everyone, which is really cool. I'm on there. My username is Adrian PII, so make sure to check it out. But yeah, FTN, really, really good time to pick some up here. It has 15 of the best financials in North America, about 40% US, 60% Canadian. So you have the 6 banks, you have the 5 biggest banks in the US, you have some insurance companies as well. So really, really good pickup. And you'll probably want me to cover FFN as well. So FFN just recently passed the $15 unit NAV. So they did declare a dividend. By the way, if ever you want to know, is there a dividend or not, just go to news and updates, right? You'll see dividend declared for Class A and preferred. So you see the Class A. So it was actually declared, but very, very close to that $15 unit NAV. So this is really the more risky one, of course. High risk, high reward. I would always prefer FTN. But at a NAV of 528, what can you buy FFN at? 553. So it is trading at a small premium now, but still 553. You're paying 553 for something that's worth 528. Pretty good. And of course, the big story in the stock market or overall is the crypto, right? Crypto took a crash because of that FTX fallout, which I have videos on. If you're interested, if you own BTCY or ETHY like me, check out those videos. I actually created a new playlist just for crypto videos, but this is definitely not going to be my, my main content here. So I know a lot of people hate this stuff. People have criticized me or lost respect for me because I invest in this stuff. But hey, I like Bitcoin. I like Ether. I feel this is, could be the future. I don't know. This is why I'm only putting a maximum of 10% in it. And this is why I'm only getting Bitcoin and Ether with covered calls. In my opinion, it's the safest way to invest in crypto. I don't invest in any of the companies like Coinbase or any companies related to crypto. I'm only getting the tokens myself. And, the FTX has not impacted there's no danger as far as I understood talking to Purpose and owning these ETFs. Your Bitcoin is safe. So, unfortunately, the latest distributions, they are still going down, but that's because the price is still going down. But I think that if the prices start picking up again, the distributions will go up. So I personally have 10% max, guys. If you want to get into Bitcoin and Ether, I feel like now is a really, really good time. It's really low. There's a lot of fear, and it's when there's a lot of fear that there's opportunity. So, but hey, if you don't believe in it, if you're scared of it, don't invest in it, guys. It's no problem, no problem at all. So that's the overall Canadian stuff, guys. I think the big winner, in my opinion, are really the RS, ENS, and FTN split funds. I forgot to cover BK. BK is, the competitor to SBC for Brompton has just 6 banks. But this one is not really interesting. The premium is high. You're looking at $11.37 NAV here, and it's $13.35. So the premium is a little bit too big. So my opinion, it's really FTN, ENS, and RS are the good picks this month. If you need financials, if you need Enbridge, or if you need real estate, now's a good time to add. Of course, EIT is always good all the time to add. And the 4 all-in-ones, same thing, always good to add. But out of the 4 all-in-ones, I think HYLD still has the most bang for your buck. So now let's check out on the American side. All right, everyone, time to look at some of the top high yield, high income funds on the American stock market. Of course, we're going to start with the big five: QYLD, RYLD, XYLD, JEPI, and JEPQ. In my opinion, the top five covered call ETFs in America. So, of course, you have QYLD, which is the NASDAQ 100. So is JEPQ. You have XYLD and JEPI, the S&P 500, and the Russell 2000 for your small to mid cap. Of course, the Russell 2000 index, 2000 companies. So all three, QYLD, RYLD, XYLD, have had slight increases finally in their distributions. I know a lot of the latest ones have been a little bit disappointing, especially QYLD, because it seems to me like if the NAV or the price of QYLD goes down, well, the monthly distribution goes down as well. But the latest one has been a slight increase. So I still believe very, very much in QYLD. I think it's still the biggest opportunity one. You can see that here, the 12-month trailing yield, 15.8. Which is the average of the last 12 months. So I think it has definitely the most potential of the distributions going up. Same thing for the Russell 2000 one. They've been going down. Typically they're about 20 to 22, 23 cents. The latest ones have been in the 19s, but this one's almost, the latest one was a bit higher, which is good. XYLD pretty strong, always in the 40-cent range pretty much. So really, really good. It's really JEPI that's been the awesome monster. I call it a monster lately. I mean, this guy's just been a monster. Look at the latest one, 61 cents, 60 cents, almost the record of 62 cents here back in July. So really, really good monthly distributions. As you notice, though, there's a little bit more fluctuation probably. And I think when the markets go back to normal, when volatility goes down, JEPI will probably, be reducing their dividends, but not necessarily a bad thing because JEPI does not do at the money covered calls like XYLD, right? So there's a little bit more growth potential and it's been doing really, really well. This is definitely the most popular, biggest covered call ETF in Canada, in the US now, at 16.7 billion in assets. Pretty incredible. Even JEPQ, I mean, it's done really well. And the distributions, although it's a bit less than the last one, which was astronomical, still very, very high. So up to you guys, which ones you feel are the best. But I feel these are really your 5 foundation ETFs. And remember that, of course, QYLD, RYLD, XYLD, and even JEPI are already in HYLD. If you have access to the Canadian stock market, you could get HYLD.U, which is the US currency version. Hopefully they add JEPQ in there. So now I want to talk about the new BlackRock fixed income covered call ETFs, which have been pretty impressive. So you have TLTW, and they just announced their recent distributions, a little bit lower than the last 3, but still very, very high. We're talking like 15% yield plus here on all of them. So you have TLTW, which is covered calls on the government bonds, very boring. Then you have this one on investment grade bonds, so really high quality companies. And then the other one is on junk bonds, but it doesn't mean that they're junk companies. They're just, regular high yield corporate bonds here. So all of them have released their latest December distribution, a little, tad lower than the other ones, but still very, very high. So can these be considered along with the first 5 as good foundation income oriented funds? The answer is probably yes, because this is actually a good complement or a good way, in my opinion, to get fixed income, but you actually get yield. So definitely keep my eye on these 3 here. Very, very interesting. Then you have SVOL, of course. This one never fails to disappoint. The distribution has been 32 cents, and it's no exception for the November one here. So it's been 32 cents for a really long time. And stay tuned, guys, because I will be interviewing Simplify ETFs and talk about SVOL as well as their new ETF high. We'll see how it will compare to SVOL. So SVOL, an absolute monster, doing really, really well. So those are the ETFs, or what I feel are the top ETFs. My opinion, which one has the most bang for your buck? I think all of them are good. It's really hard to say. It's really up to you to analyze your portfolio. But of course, the one that has the most action right now, the most volatility, is the NASDAQ 100 one. So it would be QYLD and JEPQ. CLM, our favorite and most controversial, love it or hate it, closed-end fund. So this one is right now at 18.95% premium. So is it a good pickup? It's worth $7.15. You got to pay about $8.50. I would say if it's under 20%, it's okay. If it's under 15, it's better. If it's under 10, great time to pick up CLM. So right now, 18.95, it's like, yeah, you could go ahead and add some, but not the most lucrative time to buy it. If you want to buy CLM, maybe a good time will be to wait till April, or was it March or April, when they do their annual rights offering. So maybe you could wait for that, because usually the price goes down. So that's CLM. Remember that they've reset their dividend to $1.47 starting in January, so it's a lot lower. But right now, even with this new updated distribution rate, you're looking at about 17% yield. YYY and RIV for your all-in-one closed-end fund solution. No real update here. YYY still gave a 12 cent dividend. RIV is trading at a small premium. It's worth $12.82. You buy for $12.91. So RIV is, definitely one of my favorite choices for an all-in-one closed-end fund solution. They have a bunch of closed-end funds in here. If you want a little, YYY, by the way, is just your basic option. If you want a little bit something more funky and more higher risk, go with CEFD, which literally just tracks an index of a bunch of closed-end funds. And this one is pretty, holding strong. It's recovered a little bit from $20. Now it's $21.33. And the coupons or the monthly dividends have remained fairly stable. You could see that there's just one more dividend to declare. So it'll probably be about the same thing as 2021, about $3.30, $3.35 for the annual dividend rate. So really, really good. I really like CEFD. So I personally own both RIV and CEFD. Then there's, of course, BlackRock closed-end funds. If ever you're looking for something that capitalizes on technology. I know I keep repeating myself, but BSTZ and BIGS, they are both still trading at big discounts, especially BIGS, 21% discount here. Pretty incredible, and you get yields of over 10% for both of them. I still think that BIGS is definitely the biggest bang for your buck because of the big discount here. They already reduced their dividend from 10 cents to 7 cents. So if you want some technology, if you want some more speculative innovation companies, a good one would be BIGS to add to your American portfolio. But yeah, that's pretty much all in all is your overall American funds that I feel are the best. Hard to choose which one is has the biggest bang for your buck. It really depends on you guys, what you want, what you're missing. But these are really pretty much more broad than the Canadian ones because they typically follow the indexes. So again, QYLD and JetQ, probably my top choices. Keep an eye on these guys here, especially if you want to add some boring stability to your portfolio, but keep the high yield. These ones seem very, very interesting. I'm probably going to buy one very, very soon. I actually bought a little bit of this one, HYGW, and I'll show you in my next portfolio unveil video. And SVOL, if you want a solid 16-17% yield, it has not disappointed. I really love this ETF. I can't wait to talk to Simplify ETFs again. So there you have it, everyone. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website, on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.